Hello, my dear students. Once again, welcome back to our video session e-learning of accountancy. Today, we are going to discuss with some interesting words that are related with the accounting subject. Those all words we are collectively called the terms that are using in accounting. In accounting, many technical words are commonly used. Therefore, it is essential to know their meaning, without which knowledge of accounting subject will be incomplete. Commonly used words such as business, transactions, purchases, purchase return, trade, sales return, sales, etc. are explained throughout this video. Without a proper knowledge of those words, it is difficult to learn accounting because some words like debtors and debt, creditors and credit, both of the words are same, but the usage and the application of those words are entirely different in accounting subject. Okay, anyway, all those terms we can discuss in detail. First of all, we can start from the business. Okay, I don't think so I need to explain again business because we already learned what is business in the first video. Any activity that is done in order to earn income or profit that is known as business. Business includes production and sale of goods and services and banking, insurance, then educational, then transportation, etc. Lot of transactions are included in the process of business activity. Then the second basic accounting term is that trade. Trade means maybe you know that what is trade. Trade means the purchase and sale of goods and services. That much only for sales. Like what is happening in business, that is exactly trade. All those transactions only for making profit. And the third one is capital. Yeah, we know that what is capital. Capital is the cornerstone or the pillars of a business. For developing a business, there should be a better capital structure. Actually, the capital is not only in the form of cash, but also it is in the form of goods and asset and a lot of other forms also there. Like what is actually invested or initially invested by a businessman in his business, that is exactly what is capital. So that means capital is not only in the form of cash, it is in any other form of investment. Then also for a better development of our business, there should be a better structure of capital should be there. Otherwise, our business will be going into be a fail. Okay, I hope that you were understood my concept about capital. So now we can go for the fourth point, that is proprietor. That proprietor word is maybe new for you. Proprietor and owner of a business, both of the words are same. Like a person who is investing his capital in a business and he is having all the rights to take the profit and to bear the loss of a business is called a proprietor or the owner of a business. Already we know that the proprietor or the owner of a business, he is having the right to take all the profits from his business, and also he is having the liability to take over the loss of the business. Proprietorship of a company was depend upon the type of the company. Like there are three type of companies are there. First one, sole trade business. Sole trade business means there is only one person. He is the investor and he is the owner. And partnership business. Partnership business means there should be minimum 2 members and maximum not more than 100 members. And company. Company means shareholders are the real owners of the business. Means equity shareholders are the real owners of the business. That sole trade business, partnership and company we will study in the ongoing lectures. The fifth accounting term is that asset. Assets means all the resources of a business that are having some economic values, that are called assets. Like those resources actually helps to the business to earn profit, and those are having a future value also. Like example, as a student, for you all your notebooks, textbook and your bag, instrument box, even your pen also an asset for you. Likewise, a business is also having such a type of resources. Those are very helpful to the business firm to making future profit. Example, the land where the business is located, and the plant, machineries, building, chairs, tables, etc. Lot of resources are there which are helpful to the business for running smoothly. There are two classifications for those assets. First one is fixed asset, second one is current asset. Fixed asset means those assets which are used by the business for a long duration. That is called fixed assets or non-current assets. Example, land, plant, building, machinery. Yes, we know that all those assets we are using for a long duration. And the current assets means just opposite. Those assets we are using maximum or up to 1 year, and we can convert it into cash. Example, cash in hand, cash at bank, gold, bills receivable, debtors, etc. All those assets we can convert easily into cash within a period, and all those assets maximum duration up to 1 year. Those type of assets is known as current assets. Okay, that much only the basic things about assets. Now we can go for the sixth one, that is liabilities. Liabilities means just opposite to the word assets. That means the amount which business owes to pay others is known as liability. That means the business is liable to pay someone or any other organization an amount within a prescribed period of time. The liabilities also classified into two types. First one is long term liabilities and second one is short term liabilities. Like what is exactly fixed assets and current assets? That means long term liabilities which are usually payable after 1 year. That means those amounts we need to pay after 1 year. But short term liabilities means those amounts we need to pay within an year. Now we can go for the next accounting term, is that drawings. Drawings is also known as withdrawal. Withdrawal means an amount of cash or goods which is withdrawn by the proprietor or the business owner for his own purpose or his private use, that is known as a withdrawal or a drawing. Like a businessman, he is taking his own product for his household purpose. Yes, there you may have a doubt like why we need to record such type of transactions in our book of records, because business owner he can take himself from his business. Why we need to record such type of transactions? Yeah, there is the actual usage of accounting, because business and business owner having separate entity. Business we are treating like as a separate person. So from taking our business also we need to record in our book of records. Okay, now I hope that you were understood what is withdrawal or drawings. Now we can go for the next item, that is goods. Goods means the item or the object that we are selling or buying throughout from our business. In accounting, when we purchasing some items, that is for the purpose of resale. That may be in the form of raw material or in the form of finished. Whatever it is, we bought that for the purpose of resale of it. That process is known as purchases. So the purchases also an accounting term. We need to record purchases in our book of records. Then after, when the purchased goods we are sold in the market for earning profit, such process is known as sales. Sales is also an accounting term. So we need to record sales also in our book of records. Then in between the time of purchases and sales, there may be a possibility like we don't need that much items of purchases for our business. So that time what we will do, we will retain that products to the person who delivered that product to us. So that process is known as purchases return. So purchases return also an account term. We need to record in our book of records as a purchases return. So the unwanted items we brought into our business, we are given back as a purchase return. Same like as our customers, maybe they don't want that much items we sold to them. So what they will do? They will return that items to us, to our business. So those process we will record as a sales return. That means the goods that we sold to the customers once, that is returned by them by any reason. Such goods we will record in our book of records as a sales return. So that means sales return is also an accounting term. We need to record in the accounts. So the connected accounting terms, that means purchases and sales. So purchase return and sales return, that we already studied. Now we can go for the next accounting term, that is revenue. Revenue means an amount that is received by a business through selling goods and services. So revenue we are getting not only from the sale of goods and services, but also rent receiving, interest on investment is receiving, then commission for any brokerage, that is also as a revenue, then discount received from the any sale of activities, then dividend received from the investment, so etc. Those all the receipts we are considering as a revenue for our business. So all those incomes are also considering as a revenue of our business. So revenue is also an accounting term. That means we need to record revenue in our book of records. While considering all those incomes in our business as a revenue, we need to consider all the costs incurred in our business also an expense. So the next accounting term is that expense. Expenses means an amount of cost which business incurs for producing goods and services is known as expenses. In other words, we can say that the cost of earning revenue is an expenses. Example, wages paid to employees, then salaries to employees, then freight charges, then advertisement expenses, etc. All those expenses are considering under the heading of expenses. Expense is also an accounting term we need to record in our book of records. In accounting, there is a similar word that is related with the expenses. That was expenditure. Expenditure and expenses having similarity, but both the usages are different. Like expenses is only for a short duration of time. Wages paying, rent paying, salary paying, transportation charges, etc. are comes under expenses. But expenditure is for a long duration. Expenditure means an amount that is paid for increasing the profit earning capacity of a business. That is known as expenditure. That means that amount is paid for a long duration, and also the main objective is for the long term profit. That means in accounting, expenses and expenditures are treated as a separate accounting terms. We need to separately record expenses and expenditure in our book of records. Do you know why the business firms are spending this much amount of expenses and expenditure? Yes, only focusing to generating income. Yes, income is the next accounting term. Income means we know that income is the profit of a business concern. Generate income or profit or gain, that is the main objective of a business concern. That is the standing purpose of a business concern. Like income, what it will do? Income will increase the capital of a business concern or earning capacity of a business concern. Actually, the income is means the return of a business concern or earnings of a business concern. So income also we need to record along with the recording expenditure and expenses. The main objective of a business concern is that to generate income. That is the standing purpose of a business concern. However, they were not only getting income from the business, sometimes they were going to commit losses also. So the next accounting term is that loss. Sometimes business concerns all the calculations, it will be a failure. That time their expenses will be more than the income they generated or the revenue they got. So that time they were going into a loss. In accounting time, we can say that the expenses are more than the revenue. That is the situation where loss. Loss is also an accounting term, so we need to record in our book of records. Now the next accounting term is that a debtor. Debtor may be a person or a firm or an organization who takes goods or services from us for a credit basis. He is known as a debtor. So a debtor is a person, he needs to pay us money in the future time. That means he took some items from us on a credit basis. In accounting term, debtor is treated as an asset of a business. So debtor is also an accounting term. We need to record all the transactions related with the debtor in our book of records. Now we can check the another accounting term that is just opposite to debtor, that is creditor. Creditor means a person or a firm or an organization, same like as a debtor, from whom goods or services we brought on a credit basis. He is known as a creditor. In accounting term, creditor is treated as a liability of our businessman because we need to pay him money in the future period of time. So creditor is also an accounting term we need to record in our book of records. Okay, up to now we studied lot of accounting terms. So we need to record all those accounting terms in our book of records. That process of recording those transactions or those terms in our book of records is known as entering. Entering a transaction means entry. Entry is also an accounting term. Recording of a transaction in account books with a proper document evidence, that is known as entering or entry. That proper record or the source document is known as voucher. Voucher is also known as a bill of record. That means if there is a transaction is done in accounting, we need a proper document or a proof document for that transaction. That proof document or a source document is known as voucher. Voucher that we already studied from the first video. So voucher is also an accounting term. That are the commonly using accounting terms. With an interesting topic, we will meet again. Bye bye students. See you soon.